Hello, friends, and welcome to the Optimized Advisor Podcast, where we focus on optimizing the well-being and best practices of insurance and financial professionals today. On this show, our objective is to help you optimize your life, optimize your profession, and learn from other optimized advisors. I'm your host, Scott Heinela. We hope you enjoy the show. Hello, we are back in studio. This is Scott Heinela with the Optimized Advisor Podcast for what will be a short version episode with our good friend, Anthony Nizzi from Guaranty Income Life. Thank you for joining us.
Oh, it's good to be here, Scott.
We do appreciate it. The purpose of this episode is what we want to do more of is really helping our advisors on the shop talk category. As you know, a lot of our episodes around helping advisors optimize their life, learning from other optimized advisors, but we want to be much more succinct and intentional with providing quality content, specific sales ideas and strategies that are timely for our advisors to implement into their practice. That's what today is all about. Thank you for taking the time to join us to talk a little bit about the GILICO product suite. So you had a couple great ones in mind. Can we start with just the S&P 500 concept to begin with?
Yeah, and thanks for having me here, Scott. So, we've really at Guaranty Income Life, we've prided ourselves kind of on simple, straightforward solutions, and I can't think of a more simple solution on a fixed index annuity than the S&P 500 with a cap. And we're seeing some really strong cap rates here right now in this environment, and we've had top of the industry cap rates for most of the year. And I really just kind of wanted to provide some quick stats on the S&P 500. So the S&P 500 has shown positive returns 76% of the time. That's over the last 40 years. 76% of the time the S&P 500 has shown positive returns. Of the years that the S&P 500 is positive, it's positive over 10%, 80% of the time. So 76% of the time the S&P 500 is positive, and when it's positive, it's generally positive more than 10%. And I think as we look at index annuities, one of the things I always point out is, why does somebody sell index annuities, or why would a client be interested in index annuities? And I get a wide variety of answers, ranging from, I like to participate in the market with 100% downside protection. Okay, that's
my floor,
right? Or 0% floor, right?
Yeah. Which is interesting. I get that question more and more often of people, not just reps, but just individuals in general. What's my floor?
Right.
Where I don't know, 5-7 years ago, I don't feel as though that question was in the realm of their vocabulary.
Mm-hmm.
Anyways, just a sidebar, noting that individuals are becoming more in tune and aware with, I want to de-risk, and I'd like a floor option, at least in my menu of options as it relates to my savings vehicles.
Right. Well, and I think what I've always told people is one of the reasons I have enjoyed selling index annuities, and I try to relate this back to the reps that I have an opportunity to work with is an index annuity really provides more consistency of returns for the client and can create a more predictable outcome to retirement. And when we look at it like that, what we're doing is number one, we're trying to outperform what other fixed vehicles are paying today. And we're trying to do that in a manner that's going to provide more consistency than what they might otherwise get in the market, where there is no floor on the downside. Obviously, there's no cap on the upside either.
And so let me give some specific examples of what would be alternative options. Treasury bills offered by the government, CDs offered by the bank, maybe some money market solutions. So low risk, very low risk, typically speaking or historically speaking, low yielding assets.
That's right. And so what does, consistency of returns look like? Well, in a fixed index annuity, right? If we're using an annual point-to-point with the cap strategy, if we use, starting point is the day that the contract is issued, the anniversary is one year later. If we have a 10.75% cap, which is what Guarantee Income Life has now.
Amen.
And yeah, it's a lot better than what it used to
Upwards
be.
of
Right?
12, though, correct?
We do have upwards of 12 without a bonus.
Okay.
Yeah. So let's just, for basic of simple discussion here, let's say our cap is 10.75 and the market goes up, the S&P 500 specifically goes up 15% on that annual point-to-point with the cap. The client would get a return of 10.75% for that year. If the S&P 500 on the annual point-to-point went up 5, the client would get 5%. If it went down 20, the client would receive a 0 because that's the 0% floor. And so that's where I'm talking about the consistency of returns. You can't ever lose money in an index annuity because of the performance of the index that you're tied to.
And if I may add also the simplicity of it and the transparency of that.
That's right.
Having a competitive cap rate where I get 100% of the S&P 500 for the contract anniversary period is so much easier to explain. It's easier to understand, and even furthermore, for the client to retain year after year, as opposed to it's not good or bad, but I will say more complicated with these volatility control indices. Some of them are very attractive, and they definitely have their place. But it is a lot more involved for a consumer to chart, figure out what the return is going to be. It just is. It's not even... It's significantly different than simply knowing what this S&P 500 index is. I get 100% of it up to, in this case, the 10.75 cap. I guess I should add, rates do change. Rates do vary from time to time. So for those listening to this, rates may change.
Yeah, and I think, what I always like to point out is what's the best year that an index annuity has ever had, right? And I have... people tell me, well, I was in a volatility control index or a monthly cap index or something with a participation rate that was uncapped. And one year I returned, 15%, 17%, 20%. It doesn't matter. And I always correct them and say the best year an index annuity ever had was 2008. Mm-hmm. Right? It's when, depending on how you're measuring the market, it went down anywhere between 30 and 45, 50%. And clients in an index annuity had the floor of 0. And that's the best year an index annuity ever had.
That's right.
And what we're talking about here with the S&P 500 is you hit the nail on the head, right? It's that it's transparent, right? You're tracking the S&P 500. It's on CNN, it's on Fox News, it's on Fox Business, it's on whatever news channel that you watch. You can look it up on Yahoo Finance, and there's the performance of the S&P 500, and you can download all the data points that you want on it. And I just love that transparency that's associated with it.
Okay, so let's just do can you do a quick highlight of the Wealth Choice series that GILICO offers, a 5-year, 7-year, 10-year? Go ahead.
Yeah, so we have a 5-year, 7-year, and 10-year version, right?
It's essentially the same product.
Yep.
It's different durations of commitment, and to coincide with that, varying rates.
Varying rates, right? So on the 5-year product, it has a lower cap than the 7-year product. And then the 10-year product without a bonus has our highest cap. And then the 10-year product, you can opt to have a 5% premium bonus. And then it has that 10.75% cap that I was alluding to. But one of the really cool concepts that we have right now is we have a 5.25% fixed rate, regardless of what term you go into. And so I always like to share the story. If you can do a 5% bonus with a 5.25% fixed rate, so you can guarantee clients 10.5% in year one. That's when you compound the 5.25 on top of the 5%. Mm-hmm. Guaranteed year one return.
It's a great story.
It's so simple, and with all the noise that's happening right now out there, I always like to share that you don't have to convince people the efficiency of the market if they're really pessimist or really conservative on where the market's headed right now. We always will have, you can get 10.5% year one, and then look to reallocate in year 2. And if you have someone who's very optimistic about the direction that the market is going, we have a solution for that too, with the 10.75% cap.
I love that. Okay. That's pretty much your index products. The 10-year does issue up to age 80. The 5 and 7, this is another sweet spot. It does issue all the way up to age 90. For those agents and advisors listening, you've got a great solution set for pretty much all ages.
That's right. That's right.
Okay, moving on.
Yep.
We want to talk a little bit about the guaranteed rate options.
Yeah. So, like I said, on our product, well, let me hit on this here real quick. On our product, the Wealth Choice, we have the fixed rate at 5.25%. But that fixed rate is guaranteed to never renew less than 2.65%.
Oh, yes. Thank you for bringing that up.
And that's for the life of the contract. Okay. So if you go into the 5-year surrender term, year 6, year 7, year 8, that money is completely liquid for the client, but they're guaranteed to never have a 1-year rate less than 2.65%. So let me just provide a quick example. So the last time we saw 1-year treasury rates anywhere near 5%, you'd have to go all the way back to 2007, right? And in 2007 in the industry, we sold a lot of 3-year, multi-year guarantee annuities. People were just hesitant to lock their money up for any significant period of time. I always say with the problem with short-term multi-year guarantee annuities is that those annuities have to renew, okay? And after the 3 years is up, it's going to renew into another 3 years, or if it's not a product that renews, it's going to hold a 1-year rate, and the 1-year rate is probably going to be pretty minimal. Well, with the Wealth Choice product, always having that 2.65% guaranteed rate, in a situation, if we get 1-year treasury rates that are down near 0.5% like they were for almost a decade, you're always going to have a 1-year rate of 2.65%. It's going to be like a CD earning tax deferral inside of an annuity to not have to lock your money up for a short duration interest rate or anything like that. And you can let it go from year to year until you feel comfortable to move the money out into a different index annuity or a different vehicle or whatever suits the client at that time.
So does that fixed rate guarantee apply also to the 10-year?
It does.
It does. Okay.
Yep.
Because here's the issue we see today. You and I were talking about this the other day. It's like many of these contracts that were sold for 7-year, 8-year, 10-year chassis back when interest rates were at, let's call it Fed funds rate 0 or close to 0. Right. Well, we're seeing the rates on those policies, the fixed rate at 1. I actually came across one the other day that was 0.5. The minimum rate was that low. And they've obviously, the insurance company has subsequently dropped the rate to 0.5. On that product, you're seeing cap rates of 2 or 1.5. So the consumer can't make any return.
Right.
And that's a challenging place to be. So to your point, looking at the minimum guarantees on any of these contracts and comparing one to the other is a very viable and should be considered another reason for using a product like the Wealth Choice.
Yeah. And one of the benefits of interest rates ticking up or the greater accumulation that clients can achieve on these products, but it's also the greater guarantees that are associated with these products. Those have come up too.
When times aren't so sexy and appealing, when interest rates do subside, because they will.
Yep. And it's always important to have the guarantees associated with the contract.
Who knows what the rates will go back to, but rates ebb and flow all the time. So having those guarantees, it's a great point.
Yep. Yeah.
Okay. And then just really quick, for those that are interested, the guaranteed rate lock.
Yeah.
I know it's not necessarily our favorite, but a great product for that. It's vanilla ice cream.
Yeah, it really is a fantastic product. One of the unique things about Guaranty Income Life, and I'll just tell a quick story here about this, is, we're one of the only annuity carriers that will issue a multi-year guarantee annuity up to the age of 100. And it's such a great service that we provide. And the reason being is, when I started in the industry back in 2006, a lot of annuity products had a maturity age at the age of 90, right? And then it went to 95, and now you are seeing more more and more annuity products have maturity ages above the age of 100 or more, right? As people are living longer, more and more people are facing those maturity ages.
Yeah, they're obtaining those ages, and they're then in a challenged position.
Yep. So if a client gets to the age of maturity, they have two options, right? Either start to annuitize that annuity contract or take a lump sum distribution. But that annuity will no longer continue to grow tax deferred in its current form. And having a place like Guaranty Income Life that they can move that money to and continue to let that money grow tax deferred to pass on to their beneficiaries is just such an important service that we provide.
Absolutely. So the issue age up to 100. What is your maturity date?
110.
110.
Yes.
Okay.
Yep. And it's even when you're looking at issue ages up to the age of 90, it is really important that representatives take a look at that maturity age, right? Make sure that it is something extended like 110, where it's highly unlikely that the client will ever have a maturity issue. And it's something I didn't talk about. I didn't talk about maturity ages when I worked for an annuity carrier who only issued business up to the age of 80, because it was just something that we didn't issue contracts to the age where it was something that was necessary for us to talk about. Now that I work for Guaranty Income Life and we're issuing business at these higher issue ages, it's a very important topic.
That's fantastic. Yeah. Well, having that, I mean, we come across it more and more on the regular of clients or the advisor coming to us and saying the client just got this notice. It's basically telling them they have to either move the money or they're giving them an annuitization option. This is news to me. What do I do?
Right.
And so it's important that you properly prepare that client for those solutions. And this is a great one in the sense that they can continue to earn a competitive interest rate and defer those taxes. Because let's face it, at that age, in many cases, they don't need additional income. It now becomes more from a estate planning standpoint.
That's right.
Or a medical emergency need.
Exactly. But no, the rate lock annuity is your standard multi-year guarantee annuity. It's going to earn a fixed rate for a specified period of time. A couple things that are unique about us is we do have terms between 3 years, 4 years, 5 years, 6 years, all the way up to 10 years here available here for the client. And, it's when you're looking at options, sometimes what the client wants is that guaranteed return year after year after year. Although our index annuities, we aim to outperform those types of rates, sometimes the client just needs a simple solution.
What do you think the average life expectancy is of a person currently living today, age 90?
That's an interesting.
So according to the Social Security Administration, a male currently 90 will have a life expectancy of 93.72 and a female 95.17.
Wow.
Yeah, the reason why I looked that up was because it is interesting to me. It's like the longer I live, obviously, the closer I get to mortality. But what's interesting about that is that there's little nuances at certain ages. Life expectancy actually kind of elongates a little bit for some cases.
Right.
So my point is, if you come across somebody who's 88, 87, 89, in many cases, if they're healthy, they probably have a pretty high likelihood percentage-wise of getting to 100, 102, 103. So in that regard, if they own annuities, having a solution set that allows them to defer is a good thing.
Yeah.
Not to beat a dead horse, but we beat a dead horse together. Well, thank you for coming in today. Anything else that we should cover? Oh, where do people go to find out more about the GILICO annuities?
Well, you can always feel free to email or give me a call. My email is anizzi, that's Anizzi, at GILICO.com. Or you can always give me a call at 515-975-4936.
And of course, don't hesitate to reach out to us if you'd like to get directly acquainted with Guaranty Income Life and all the great things that they offer.
Thank you so much, Scott.
Cheers. Thank you for tuning in to today's episode. Please subscribe, like, share, leave a comment or review. Be sure to check us out on social media at Optimized Advisor Podcast. Till next time.